Thank you, Chairperson Sir, for speaking to CNBC TV18 and congratulations as far as listing of the life insurance behemoth is concerned. I want to speak and start this interview by talking to you about the listing itself. Of course, we've listed at a little bit of discount to the issue price. We've recovered from that low point. Now, the policy holders who've got their allotment, retail shareholders, specifically for them, what will be your message as far as company's performance is concerned?
Thank you for all the congratulations. I'm so happy to be part of the LIC listing today. I understand, yes, the reason why it is listed at a slight discount may be due to market conditions. I'm sure that it will improve going forward. I would like to give a big thank you to all my policyholders and investors, especially the policyholders who have stood by us right from 1956. And I would like to tell them that we are working on ensuring that LIC continues to grow, both in the short term and the long term.
Okay. Sir, your VNB margins, which is a key monitorable point, is at about 9.9%. Private players derive anywhere about 25%. You made a big statement saying that it will take less time for you as compared to private players post-listing to reach that 20%. Where do you see this performance coming from? What will be the strategy to reach that mark? And what is your definition of less time as compared to private players?
See, the reason I said less time is because we have a lot of bandwidth in terms of the agency force that we have. I mean, to change from one product to another is quite easy for us. By introducing new products in the market which we already have, I think that agency force will be smart enough to pick up the good ones and sell it to the customers who need it. At the same time, we are working on strengthening the bancassurance channel in a big way. We already have tie-ups with the existing banks. We are only trying to improve the IT infrastructure to ensure that selling takes place seamlessly through the banks. Also, on the digital marketing, we are working on a few things to ensure that maybe a couple of months from now, we'll be able to change what we've been doing in the past.
And how short would be that less time as compared?
The time is very difficult to start. What I really meant, because of the size and the kind of infrastructure and the team that we have in place, it should not take us long to switch from a certain kind of product to another kind of product. And therefore, that is what I meant by saying that we'll be faster in reaching the 18, 20, 23, 25 kind of VNB margins.
Okay. Talking about the non-par contribution to your premium, that comparatively is very low, and that is where the most attractive part is when it comes to margin. What kind of growth do you see as far as the non-par segment is concerned? Where does it stand in your books at this point of time?
We've done well in non-par in the last year, grown slightly more than last year. But then I think going forward, we are seeing definitely, I would say, big double-digit growth in non-par, maybe in excess of 30-40%, which would take us to the target that we want.
Okay. What is your current product mix to your book right now? And when you aim to reach that 20% plus VNB margins, where do you see that product mix changing? How do you see it? At what point do you see it coming through?
So product mix is something that, again, determined by a customer who wants to take a product. Let's say someone is interested in a par product now, wants to continue to have par products, we are there. We don't want to stray away from our strength, which is par, but we will grow the non-par business, not gradually, but in a big way. Going forward, I think maybe a couple of years from now, the product mix should look quite even in terms of both par and non-par. And soon, I think in a couple of months, we'll be coming up with new products also.
Okay. Last couple of questions, Chairman Sir. The first one is about your EV growth, your embedded value, of course. At the time of last assessment was 5.39 lakh crore rupees. Over the next 2 to 3 years, how do you see that EV growth shaping up? And your EV is also largely linked to mark-to-market returns. Do you see that as a big threat if there is any correction in the markets that will have a negative impact on EV?
Very difficult to predict EV changes as of now, but I can tell you that on the MTM part, there's not nothing to worry because we are contrarian. And even our book of equity not very big compared to the overall size that we have, and we've been able to manage it well because we are contrarian. We sell when the market is low, and rather when we buy when the market is low and sell when the market is high. We don't change that the way of thinking going forward. That has given us huge dividends in terms of returns on equity, in the past, and that will happen in the future also.
Okay. Thank you so much, Chairman sir, for speaking to us.
Thanks a lot.